Welcome back to the channel. I will go through the financial results of two companies. The first one is ASML, the second one is TSMC. Okay, for ASML, after they announced the financial results, you can see that the stock price actually tanked quite a fair bit. So in the past 5 days, the share price has dropped by about 17%. But if you look at year-to-date, stock price movement is still up about 25%. So I think when I look at the financial results, the first thing that I pay attention to is definitely revenue growth. And this chart is showing last 12 months revenues. So you can see that this latest quarter, right, the revenue is about 25 billion. It is a dip compared to the previous quarters, but I think in the earning transcript, I noticed that the companies is trying to say that, okay, this is only the first half. The second half, the revenue results will be a lot better. In fact, they are saying that in terms of revenue, they are still keeping to the guidance, meaning that they are expecting to meet the guidance that they shared before. The result, I would say, although it isn't fantastic, but if you just read between the lines, you will notice that the company or the management is trying to say that don't worry about the growth, the second half will be a lot better. Now comes to the results, right? These are the breakdown of all the lithography machines that they are selling. So one thing I noticed is that for the latest quarter, shares of the revenue coming from memory is higher compared to Q1. Definitely shows that most of all this expansion, right, is really because of all the AI. Because I think even the memory fabs, right, they are requiring all these new lithography machines, for example, using EUV in making their memory chips for the AI. In the past few years, from 2020 to 2023, you can see that the revenue growth has been fantastic. For 2024, first half, we are only like 6 months into this year, right? So the result isn't as fantastic compared to the past year, but there are guidings that second half will be a lot better. So I expect that the revenues for the second half, after adding up the second half, right, it will probably about the same as 2023. It's not a fantastic year for 2024. A lot of all these expansions that they are carrying out now, you will see the results in 2025 and beyond. One more thing, I noticed that the financial analysts, they are not really just focusing about the revenues of the quarters, because all these revenues that they have generated, right, these are the machines that already delivered to the customers. What is supporting all this growth is really the order book. And when it comes to the order book, I think Q2 also is just a normal quarter, nothing fantastic there. But management is saying that there are more order books coming. They are expecting more in second half and also in the coming years. That's on the result. And you can see that the financials, right, for ASML, they have been earning quite a decent amount of revenue, free cash flow, and they're paying all this money back to the shareholders in the form of both dividends and also the doing share buyback. For 2024 year to date, just the amount of dividend and share buyback is already matched the year of 2023. So this one just shows that with all the ramping of their capacity, they are still able to generate decent amount of free cash flow, and they use all this free cash flow to return to the shareholders. I think this just shows that the company is very shareholder friendly. Just one glance of the recent quarter results. I would say just looking at the big trend, right? Don't focus too much on Q2 alone. If you just look at the trend, it is definitely still trending up, although there's small dip in the recent 1 or 2 quarters. Upcoming few quarters, you will see they pick up again, because we have heard a lot of stories about them adding a lot of capacity to ramp up the sales to support the future demand. I think this is definitely still a growing companies. When it comes to cash flow statement, this is a good table actually. Just pay attention to where are the cash coming from. So basically, if you study the company's cash flow statement, right, there are 3 parts. One is the operating activities. These are essentially the machines that they sell to the customers, and then of course they are earning profits, right? So this is coming from their core business. At the same time, you still need to pay attention to the investing and financing activities. I think the financing activities, if you just pay attention, is usually negative. The reason is because whenever the companies do share buyback or they pay out the dividends, you will see that it is a negative statement here. Operating, usually it should be positive, because these are essentially the revenue minus out the expenses that they pay out. And then I think you can see that just this quarter, right, they are essentially using the monies, the profit that they earn from their operating activities to pay for all this money used to pay dividends and share buyback. I would say a healthy companies, you should see this kind of pattern whereby they have huge operating activities, generating decent amount of cash, and then they really use that money to pay to their shareholders. There are some companies, right, they have a lot of operating activities, but at the same time, they still need to invest a lot of their money in all those capex, buying new machines, building factories, and so on. So sometimes if you invest too much, that means you don't have money to pay or to return back to your shareholders. In that sense, then you need to be careful because profit doesn't necessarily translate into money that go back to shareholders' pocket, right? So I think that's something to pay attention to. For SML, I would say that is a good picture to see here. I think that's all about SML. I'll just say the quarter isn't a fantastic one, but if you just follow the long-term trajectory of the business, I'll say it's still a decent one. And in terms of the cyclicality of the sector, there's hint that right now they are in upcycle, meaning that there's a lot of order, there's a lot of expansion. They are expecting that their revenue to increase in upcoming 1 or 2 years. This is very different compared to just like 1 or 2 years back when they have experienced some slowdown in terms of the cyclicality. Okay, next one, I'll just quickly go through the TSMC. Okay, for TSMC, also, it's the same thing. I think this past week, we have seen some, like a mini, I won't call it corrections, it's just a mini dip, and it affects the semiconductor industry quite a fair bit. So in the past 5 days, TSMC share price has dropped 12%, but if you look at year-to-date share price, right, it's still up like 63%, which is very decent. They are in this kind of share price momentum is also because it is becoming more and more obvious that this semicon cyclicality, right, they are entering an upcycle. This is just the surface. If you look beneath that, I would say that it's mainly just pushed up by all the AI orders. But if you look at the smartphone sectors, right, it's still like there's some sign of improvement. We haven't seen like huge comeback in terms of the cyclicality. So let's start with revenue again. So revenue, this is last 12 months. You can see that it's, I think, close to all-time high now. So I think it's a good picture to see. Later, I will show you more breakdown and you can see the details. So I think this one is an interesting chart. It shows that for TSMC, right, it's not just they share their quarterly revenues. They actually share their monthly revenue as well. So you can see that this is like every year by row, and then every column is the month, right? And so you can see that if there's any cyclicality, you can also see it by observing the changes from month to month. So if you just focus on any one month, right, say for example, like now the latest month is June, right, you can see that it's really like from a small base becoming larger and larger and larger. So you can see that definitely the company is growing. And just for your information, I bought into TSMC in 2020. So you can look at like 2020 June, right, their sales is 120 trillion Taiwanese dollars. From 120 now it's already like 207. You can see that it's almost doubled from the time I bought, which is only a short couple of years. So I'm expecting that these numbers continue to grow, and you can see that across all months, right, they are all growing. Of course, if you look into the details, for example, like 2023, you can see that there's actually a small dip here. You see, like let's say from April, May, the revenue in 2023 is actually lower than 2022. That's the slowdown that the company has faced, which is normal. You don't see like a straight line smooth going up, right? Sometimes there's some cyclicality, and then the revenue will dip, and you read it in newspaper also. If you pay attention to, you see that they will announce that the utilization rate is lower and so on. So these are all normal. It's just that now the good thing to see that is that the growth has come back, and this is definitely a good picture. So if we take these numbers, right, this revenue, and you just like compare to the period before that, right, just calculate the year-over-year growth, you will see this kind of pattern here. So I think last year was the worst timeline. For example, between March last year to September, right, it's really like you see a long stretch of period where we are seeing a slowdown, meaning that they can't even generate a positive growth. But you see, since March this year, there's a decent uptick in terms of their growth rate. It's 34% in March, and then in April it's 59%, May is 30%, and now the latest month is 33%. So you can see that definitely there's a lot of orders, and I believe quite a sizable of all this revenue are generated from chips that is related to AI, for example, from NVIDIA, instead of like coming from smartphone chips. There's strong growth there, definitely, and we don't know how long this one will last, right? But hopefully before the AI chips revenue comes kind of slow down, then we can see some uptick in terms of the smartphone business. So that's the smartphone part, right? Is still in terms of the revenue share, is still much larger. The AI chips coming from a lower base now is already become a lot larger. So again, upcycle always good for shareholders, and you can see that the share price also will reflect, right? So in terms of free cash flow, one thing I noticed is that in terms of the revenue and profits getting a lot better, right? But in terms of the capex, it used to be very high capex just a few years back, where they announced a lot of expansions, building new fabs and so on. Now I think all this expansion is still ongoing. It's just that they toned down a little bit in terms of how much they spend on capex. You'll see there's more details in the upcoming slides. In terms of revenue by technology, I think this recent quarter there's a huge increase in terms of the shares coming from 3 nanometer. I think this one probably is related to the new products, for example, like those coming from Apple, where they launched the latest iPad Pro and also the upcoming iPhone. I think soon they will have to ramp up the productions of all these chips already. So I think the 3 nanometer process nodes, right, this one will ramp up in upcoming few quarters. And now if you read the transcript, the management is already starting to talk about the 2 nanometer and the 16, right? The 16 is the one that coming up next after 2 nanometers. So all these, right, actually started from, let's say, like the 7 nanometers. These are all what we call the leading edge node, meaning that these are very advanced chip fabrications, and not many companies can do this kind of level. So that there's still pricing power when it comes to these process nodes. And you can see that each of these, right, say for example from 7 nanometer to 5 nanometer to 3 nanometers, these are all like, they call it like a big nodes, meaning that it will ramp up, take a few quarters to ramp up, and then they will generate tons of revenue, and then it will last for many quarters. For example, like you see the 5 nanometer, it's still like selling, like still quite a huge number of shares coming from 5 nanometers. So in terms of platform, definitely if you just look at the quarters, right, like quite a sizable, like in fact like more than 50% coming from HPC. So all the data center chips, right, all belong to HPC. Smartphone is the one that is like still struggling with low growth. I hope that with all these innovations in AI, even Apple is talking about like Apple Intelligence, I hope that this will entice more customers to upgrade their smartphones. So hopefully the smartphone share will increase and keeping up with the HPC. So I think that's my hope. But then from what we are seeing now, actually that there's still not much sign that smartphone is having a pickup, at least up to Q2. Q3, Q4 still yet to see. This is just the same thing. It's just like expressed in terms of percentage. I would say that the 3 nanometer, 15%, this number will continue to grow, and hopefully it will push up the sales a lot more by all this ramping. This is the capex that I just mentioned. You can see that the blue bar here, right, this is the operating cash flow. So you can see that it's increasing from one quarter to one quarter. Just that there's some dip in second quarter. If you just look at the free cash flow, right, actually in the past 3 quarters they have been doing quite well, because in terms of the capex, it is well managed now. Remember for TSMC, right, you cannot just look at revenue alone, because from the revenue you still need to deduct out all the expenses to arrive at operating cash flow. And then from the operating cash flow, you just need to see how much that they are spending in terms of capex. Because if there's too much capex, right, sometimes they really don't have leftover money to pay to the shareholders. So in that sense, if that's the case, right, you as a shareholder, the amount of dividend that you receive will be little, and also the share buyback will be little as well. And all these share buybacks still help out when it comes to pushing up the share price. So this is something I would say they're still in a healthy position. This is a lot better as compared to 1 or 2 years back when they are spending like crazy in capex, and now they are reaping the fruits of what they have put in terms of all these capex. One more thing to highlight, I think these are only the things that if you read into the transcript, right, you will get the hints. Sometimes the management, they will mention, sometimes I think they are playing with the timing in terms of when to announce these things. For example, right now there's all this rumor that TSMC management is trying to talk to their customer and say, hey, you guys are making huge amount of money, for example like Nvidia, right, and we are supporting you, and you are not able to come up with the chips without us. So it makes sense for TSMC to earn more from all this business as well, right? So they're having all this discussion, and let's say coming from Nvidia and maybe other customers, they're also happy to share a larger shares of profit with TSMC. But each of these pricing and their overall pricing strategy is really like strategic, right? Like using the management words, meaning that it's really one-to-one. like one supplier and one customer, they negotiate, they discuss in terms of what are the value that they bring to the table, and then they, like have a handshake to say that, okay, this is the pricings that both sides are happy, are comfortable. I think what they're trying to say is that they will charge a higher price to their customers, and you'll see that all this will translate to higher like revenue, higher operating cash flow, and so on. But it's a bit early in this quarter. That's why they are mentioned a little bit. They just say like, words like so far so good. This is continuous in process. We are continuing to sell our value. So it's like, okay, there's no numbers now because this haven't been reflected in their financial statements, right? Financial statements is always backward looking. But just reading between the lines, you can tell that yes, they are going to increase the price and the financial result will look better. So for those who pay attention to the company, these are the things that, for example, I have the shares. Even if I want to sell, right, I will just wait until all these results, all these talks has materialized into, like positive impact to the financial statements, and then only I will sell, because these are the good news that is upcoming, right? Let's be patient and wait for all this. All right, that's all the sharing that I have. I will end here. Bye bye.